2. What's up? What's up?
Yo, yo, yo.
What's up, you guys? Come on in the room. Happy Tuesday. Make sure I turn my phone on silent. How y'all doing? Come on in the room. Welcome. Are y'all decoded? Welcome, YouTube. Let me know real quick, everyone who is watching us live, drop your name in the chat. My name is Ashley Denmark.
I'm Antonio Denmark.
We are your hosts. We are your coaches. Welcome to REI Decoded Malfunction. Welcome to REI Decoded Facebook group. Welcome to the group. This group is for new and experienced investors looking to scale their business, looking to get into their first deal. We are here to help you. We are here to navigate you. Antonio and I know your struggles. We have those same scars, and we are here to help as many people, to help you get off the sideline and get into the game. So, welcome into the room. Drop your names below so that we know who is an attendee. If you are watching this live, put live in the chat. If you are watching this via replay, make sure you put replay in the chat so that way we can see you. That way we can help you and navigate you through this process. What's up, Miss Ward? What's up, Miss Ward? I have someone you just hung up with waiting backstage. Yeah. Welcome. Come on in, you guys. Let's go. Absolutely. All right. Sonia, you want to do any paid homework before we go?
I ain't paying no homework.
You're not paying to do any homework. All right. Well, yep, I see y'all. Come on in the room. All right. Well, let's do this real quick right before Brent hops on.
We believe in partnership. There's time, there's talent, and there's treasure. First thing you need to do is identify what you have. And once you identify what you have, start looking for other people that don't have what you have. A lot of the things you hear us do, a lot of the things that we talk about, they're from experiences.
We want you to get creative. We want you to think outside the box because that's really where it lies. Let's go.
Yo.
If you have not gotten your tickets to the Dynamic Funding Tour, what are you waiting on?
We have a date of June
I think it's the 21st.
21st.
It's
a Saturday. We're going to do our next one, June 21st, Saturday in Birmingham.
Yes.
Get your tickets.
Absolutely. After that, Montgomery. After that, Atlanta. Who knows? We may even slide another location. So make sure you get your tickets. Make sure you're paying attention. Make sure you get in the room. There is so much magic in the room, you guys. In fact, a part of being in the room, sometimes you have to be in virtual rooms and experience magic as well. So I'm excited today. What's up, Rob? Hey, Kenyatta. I am excited today because we met, we're always trying to add people to our lives, trying to network and trying to connect to see where that synergy is. We were in Vegas in March. And when we were in Vegas, we were at a conference, and at this conference, we met Brent Carlson and immediately had synergy and realized that some of the things that he does and some of the things that you guys ask us about time and time again, and are some of the questions that we know can really help you from a tax standpoint, can really help you with shielding when it comes to your LLC, making sure everything is right. So I want to welcome to the stage. I want to welcome to today's training, Mr. Brent Carlson. How are you?
Woo, 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 woo.
Doing good. Oh, thank you so much. I'm doing great. How are you?
I am doing good. It is Tuesday. It feels like Monday.
Yeah. Every day feels like Monday for me, and we're so busy around here. I just got back from Dallas. So speaking about being in the room, I just got back from a private money event out there. Had a speaking engagement, and so it was a similar event where I met you guys at. So
Sweet,
Woo-hoo,
sweet,
let's
sweet.
go. Absolutely.
so I'm still playing a little catch up. So yeah, it's still Monday for me too. But
Well, we are so happy to have you. We are so happy that you're here. I see you guys in the chat. Quick question. Well, not quick question. Bam. Everyone who is on live, make sure if you're watching it live, you put live. If you're watching it replay, type replay. And make sure that you invite people that you think will be interested in watching this live and being a part of this training. Make sure you invite them to the group right now so that they don't miss out. All right.
Yep. If you have questions, make sure you drop them in the chat. He'll be more than happy to answer for you. Like, you don't get this type of access every day. So take
Absolutely.
advantage of it while you have it.
Yeah.
If he says something you don't quite understand, just drop it in there. Say, hey, can you say it a different way? I don't really understand. But it's just all about you guys, so you guys can get knowledge and information to take the next step in your journey.
Absolutely. Brent, you won't be able to see the chat, but I have the chat open and I'll read them to you as they are asking the questions. Okay.
yeah, sounds good. And like I think it was training day, like Denzel said, talk to me like a 6-year-old. So if you need me to talk to you like a 6-year-old, I'm down. Whatever
That's
whatever
right.
we need to do. So because it's new to everyone, and I get that. I've been in this world for 20 years, and a lot of people, it's brand new. One of your students, friends, colleagues that I prior to this event was on the phone doing a walkthrough of a new entity that we were able to help with. So already just had a great experience with you guys. If you'd like, I could just kind of jump right into it and kind of introduce myself to the audience and everything. Okay. And we can leave that page up for a second. I have this is just a few of our staff members here. We actually have other members. Actually, Dirk is our newest member. He's our vice president of business development because we just opened an office in southern Utah. So he's running our Utah division, and he's actually not on here, unfortunately. Sorry about that, Dirk. I have to get that updated here and get you on there. We're a full service incorporating bookkeeping, accounting, and asset protection company. So I've been in the industry personally since 2005. I worked for a company, started in sales, became their general manager in 2007. And then in 2013, they were starting to close their doors, and we had an opportunity to start a business. So my wife and I partnered up with Dirk's brother, Nate, a couple others, and started Corporate Capital with a vision to help business owners, to help people that are brand new or multi-million-dollar companies. You'd be surprised how many people are structured incorrectly and they're making a lot of money. And sometimes by making the smallest adjustments, it can really change your lives financially and also protect you a lot better. So today, I'm going to talk to you guys about that. I'm going to talk to you about why it's important to incorporate or have an LLC, the separation it gives you, the branding it gives you, the things that it can do for you, not only from an asset protection point of view, but also from a tax point of view. Also going to talk about the different ways that you can be taxed. I'm going to tell you a little bit about our story. Corporate Capital, a lot of people, when they see us at events, they come up thinking that we're a lender. We're not a lender. We do have a program to help put you in a position to get with a lender. But I'm going to explain that story. And it's kind of a cool story how we got off the ground back in 2013. And then the third piece, for those of you, and again, the conversation I had earlier was great. I'm going to talk to you about the importance of trust, revocable living trust. And then for those of you who have a portfolio where it's really time to look to start protecting things and take that next step, I'm going to educate you on that today. And again, some of you may not be there. You're just getting started, but wanted to kind of provide the education and the goals of what the big picture looks like. And that is the objective today. Did you have anything that you wanted to say or add?
Let's go. Let's go.
This little dog that's on the team.
Okay, so I have to tell you, so my other four would be very jealous because I just got Mookie on January 1st because we're Dodger fans. So I have 5 dogs, 4 Shih Tzus. And so Buttons has been on the page from day one, but my other 4 are not. So he's my oldest dog. That's Buttons. So on our website, he's listed as the company mascot, and it says, please bring a treat. And it's funny, people have actually brought treats, and he's not here. And I'm like, it's just a joke, but people literally will bring treats.
Attention, right.
So this is just a small number of our team. From at the top there are the main principals. As far as my wife was one of the co-founders, was the president up until 2020. Because of COVID and having 4 boys, we decided to buy her out, so she stayed home. Nate in the middle is my best friend and our CFO. His wife and is the other partner here at Corporate Capital. Just a great guy. Runs our bookkeeping and accounting and one of our tax divisions. We have 2 divisions. Flo there is our director of funding. So once we help our clients get them in a position, or if they are looking for funding and there's measures that you guys need, or Ashley, you probably should meet Flo too. Flo is one that has a lot of relationships, and when people are looking for a line of credit or for loan options, he's typically the guy who will have our clients call. And then Josh McLean, he'll be the last one I introduce, as our head CPA. He personally does all of my taxes. Younger guy, but very, very sharp. Worked for PBTK here in town, which was acquired by BDO, which is a very large accounting firm. So I recruited him, snagged him away in 2017, and he's been with us ever since. Again, that's just a little bit about our team. So let's just kind of jump right into it here. Let me click on that. Go to the next slide. All right. So let's talk about lawsuits. I mean, we live in the United States. Absolutely love our country. I love the opportunity. Love being a business owner, an entrepreneur. But at the same time, people want what we have. We're willing to put in the time. We're willing to put in the work. We're willing to work 13, 14-hour days. And then you have someone that wants to do set you up for an accident or come in. I have a client here in town who's an NFL linebacker that we do his accounting for. He has a barbecue place, and the guy went in. There was a wet, slippery floor sign, and guess what he did? I watched the video. You could totally tell he went and slipped on purpose because it wasn't natural. But he's suing him. He's going to try to sue him for a lot of money, but he's a Nevada corporation, which I'll get into and why that's important. But before we begin, let's just read some of these graphics here. So 4.23% of the world's population lives in the U.S., right? So roughly 4.2%.
Mm-hmm.
However, 66% of the lawyers are American lawyers. 100 million plus lawsuits are filed each year in the U.S. That's every 30 seconds. And some of you are maybe in California, Florida. Those 2 states have the most lawsuits. And so when you incorporate, a lot of times people ask the question, well, do I have to incorporate there? when it comes to lawsuits, and we have all this exposure, and we're in a country where I call it the 2 L's. The fastest way to get rich is the lottery or the lawsuit. And that's what people want what we have. People will go after us, but we can separate ourselves from our business if we do it the right way. Now, some of you out there may be doing consulting or something as a sole proprietorship. You are taking on so much risk because you are your business. You're limiting yourself the way that you can be taxed. So I'm going to get into that for you today. But before I talk about that, I want to talk about piercing the corporate veil. So in order to pierce the corporate veil, you must have fraud or misrepresentation, failure to absorb corporate formalities, in some states, undercapitalization, the commingling of assets. In the state of Utah, the number one reason why the corporate veil gets pierced there is because people are commingling their assets. A lot of people will set up an LLC and just file it with the Secretary of State, and they don't have what Miss Ward has. They don't have one of these books here that have all of the corporate documents and the minutes and the things that you need in order to be in compliance. So what's really nice though is, and I want to see if, because I had to take off a couple things to fit the slide. One thing I want to talk about is the state that you can incorporate in. So I'm showing you all these examples of ways that your corporate veil can be penetrated in Alabama, where I assume most of you reside. Maybe Alabama, South, maybe some West Coast, East Coast. But in your state, if you have an LLC, you took the time, you spent the money to set up an Alabama or a California LLC. But the problem is if you do any of those things on this list, and these are just a few examples, if you do any of those things on that list, they can pierce your corporate veil and they can sue you personally. So by having a Nevada or Wyoming entity, and again, this is where if you have questions, and I'll go real slow, but you are free to choose any state you wish to incorporate in, regardless of where you live. So since most of our clients want the best tax treatment possible and the strongest asset protection, we will do either Nevada or Wyoming. Now, let's talk about that for a second, because some people might say, well, I'm not doing business in Nevada or Wyoming. That is perfectly okay. What we do at that point is we will register your LLC to do business in the state where you live or where you're operating. But by having a Wyoming or a Nevada LLC, and I've done this over 13,000 times in my career, 99.9% of these entities, Ashley, are filed in either Nevada or Wyoming. And here's why. There's no state tax or there's no corporate tax. So don't worry about double taxation. Just go ahead and assume that if you live in Alabama, you're going to pay all your taxes in Alabama. If you live there, you're filing a domestic return. It's going to flow back to you in one way or the other. So you're going to pay your taxes in Alabama. But by having an entity in the state of Wyoming or Nevada, the laws here, the statutes protect us. One time since 1987 has the corporate veil been penetrated, and that's because the company was committing fraud. Other than that, you cannot pierce the corporate veil in Nevada or Wyoming. So what we do is we will set our clients up in one of those two states, and then in most cases, we will foreign file. It's called foreign file. We will register them to legally do business where they're operating. So now, if they were to have that lawsuit, if they were to be sued for whatever reason, car accident, consulting went bad, a rental property, someone slipped and fell, or I had a death last year, something like that happens. Now, I can tell you that's why this brick wall's here. That brick wall is there to show you that you literally are putting a brick wall between your business life and your personal life. And so any investments that you do, even private lending, I tell people, use an LLC. If you have rental properties and you're holding 4 rental properties right now in your name, if something happens at one of those properties, they can go after every single one of them. So there's ways that you can separate those properties without it getting too expensive. And luckily, you guys live in one of those states that allow what's called a series LLC, which I'll get to here in a second and explain that to you. But again, the LLC is only going to be set up in Nevada or Wyoming, and we will register you to do business in your state. Now, because there's no state tax in Nevada or Wyoming, you are not paying any type of return. You don't have to file a tax return here. So again, there's no double taxation. This is just all for peace of mind. All my 13,000 plus clients are all over the country, and those entities formed in Nevada and Wyoming, most of those are foreign filed in like California, New York, Alabama. So now when they look you up, or if something happens in your business, it's going to show that you're registered with the Alabama Secretary of State. But the difference is now is you're a Wyoming jurisdiction or Nevada jurisdiction, which means they cannot sue you personally. So if you're doing anything in business, and I tell people, sometimes people will say, well, I don't make a lot of money. Well, I feel that if you don't make a lot of money and you're doing something that has high risk, I would definitely incorporate, because now we're putting our personal assets at risk for something that's not generating a lot and has a potential risk for our personal assets. So again, by having that LLC, it literally puts a brick wall between whatever you guys are doing personally and then whatever you guys are going to do professionally. Now, let's talk about why an LLC over a corporation. An LLC is, in most states, it's a little cheaper to set up. It's easier to run. So an LLC does not have to do the meeting minutes, the minutes of the director, the shareholders. It doesn't have to do all of the things that are required for a corporation. So an LLC is very simple filing. Once it's filed, you literally have that brick wall put between whatever you're doing in your real estate or your business life. Now, when it comes to the limited liability company, if you're a single individual, then it would be a single member LLC, which I want to explain what that means. So if you're a single member LLC, it's the same thing for all of you who filed taxes this year as a sole proprietorship. So when you're a single member LLC, you're going to pay that 15.3% self-employment tax on all the profits that are left over at the end of the year. Now, your LLC can be taxed as a single member. It can be taxed as a C corporation, which I personally have an LLC that is on a fiscal year that is taxed as a C corporation. So when you set up the LLC, that is just a state filing. Now, and this is where our company really comes into play and why we offer so many services under one roof, is as you guys start making money and growing your portfolio, we want to make sure that your LLC is being taxed the correct way. So if it does make sense for you to be taxed as an S corporation, or if it even makes sense for you to be taxed as a C corporation, you have that option available to you. And what's very unique about our company and our approach with Dirk and I is we don't just set up the LLC and send you a book and say good luck. Usually the walkthrough of like a record book to make sure you're in compliance takes about an hour. And after that, that's just the start, because a lot of you are going to have questions. I've been doing this 20 years and I'm still learning things. So I don't want people to feel like they have to understand all the ins and outs of an LLC before they move forward. Our job is, once it's in place, to make sure that you're using it correctly and that you are in compliance. And if you are making usually 100,000 plus, now we're going to want to take advantage of that LLC being able to be taxed however you want. So again, it could be the same exact situation that you guys are currently in right now. And the only difference would be is this brick wall, this orange wall that you're seeing. And if that's important to you like it is to me, now you have the peace of mind of knowing I don't care if it hits the fan, it's a predatory look. I don't care what happens. They literally would not be able to go after and sue you personally. Now, sometimes I'll get asked the question, what if I already have an LLC in place? Okay, many of you probably already have LLCs formed. Now, if you already have one formed, that is okay. You are able to manage and run that LLC. So let's say, for example, Ashley, Antonio have an Alabama LLC and they are the owner of that. They're the member of that LLC. Well, because it's in Alabama, now we can personally be sued because we're the member of that LLC. So this description here, all those LLCs at the bottom are for those of you who already have an entity formed that are looking for asset protection. So now those LLCs, instead of being owned by Brent Carlson, it's owned by a Nevada or a Wyoming holding company or a holding LLC. So now what that does is if your current entity that you guys have, now obviously if we're going to start fresh, we're going to start you off in Nevada or Wyoming right out of the gate. Mm-hmm. If you already have an entity formed and you're looking to protect yourself, we can simply add a holding company and now it becomes the owner or the member of your current LLC. So now if you get sued and they try to sue the member, okay, go ahead. It's a Nevada or Wyoming holding company. Now those states and those laws clearly state, and I've mentioned several times, they're not allowed to sue you personally. I don't care what happens. So by adding this holding company, for those of you who have LLCs already in place, we can give you that peace of mind of knowing that you are protected personally because you have this extra layer of protection. All right. So the holding company would be formed. It would just stay here in Nevada. It would just stay in Wyoming. It wouldn't do anything else except own your current LLC to give you that protection. Now, proactively, I've been asked these questions as well. Can I convert my current LLC or my current company that I have? Can I convert that to a Wyoming or a Nevada entity? And the answer is typically yes. So what we will do is we will look at that to see, does it make sense for you to convert it to the state? What's the cost associated with that? Or does it make sense to just form a holding company or shut it down and then just start a new one? But I think for the most part, the audience, Ashley, is probably about half and half kind of established, half fairly new. So I'm guessing some of you already have entities in place. And if you have this record book here, this record book, you should have your operating agreement. You should have your corporate seal. Well, these green stock certificates here, those are who owns the entity, okay? So when we fill out these certificates, like right here, I won't say the name of the client's trust, but it's the ABC Trust, okay? So now the owner of this client's company is his trust, okay? Which again, I'll get into. But currently, if you guys have companies formed, you are naturally the owner, you're naturally the member. And if you're in one of those, if you're not in Nevada, Wyoming, or Delaware, now Delaware is very popular for publicly traded companies, but that's never going to be something we'll form for this group. We would always recommend Nevada or Wyoming for the structure for those reasons. And the very nice thing about it, because again, there's no tax, it's a very minimal renewal each year to maintain a Nevada or Wyoming entity. And let's say you were going to form an Alabama LLC next week. You were going to buy a property or you're going to do a deal or whatever you're going to do. You still have to, sorry, I just lost my train of thought on that. I was thinking about Wyoming. I lost my train of thought on that one.
I got a question for you, Brent.
Yes, please.
From a 50-foot view,
yeah.
From a tax standpoint, what's the biggest differences between S Corp and C Corp?
or is there a difference?
Yeah, no, that's a great question. So the C corporation, and we don't have a lot of clients that will tax themselves as a C corporation. And the reason, Antonio, is because that profit and loss will stay in the company. So if you're a C corporation, it is a beautiful tax right now. Don't get me wrong. It's a 21% flat tax. But now, if you keep that money in the company at the end of the year, that money has to stay in the company as opposed to an S corporation. So as an S corporation, which I'm an S corporation at corporate capital. So let's say at the end of the year, we profit, just to use even numbers, we profit $200,000. Okay. I have a partner, 50%. I'm a 50% partner. So I get a K1 issued to me that states to the IRS that corporate capital profited $200,000 last year. But because it's an S corporation, it flows to us as the owners of the S corporation on our K1. But what's beautiful about that is I save every $100,000 of profit that my business makes, I save $15,300 because I am an S corporation. And that flows to me personally. So now because I'm an S corp, let's say I start making a lot of money, you guys start making a lot of money, you're going to start building up what's called basis. So now you can start pulling out distributions, $100,000, $200,000 in the future, tax free, because you paid on it earlier. So the S corporation is something that you own. It's your business. It flows to you as an individual, but you save the 15.3% that you don't save as a sole proprietor or single member LLC. Now, the C corporation, Antonio, the problem is yes, you might only pay 21% tax, but now let's say you want to get that money out of the company. Now it's called double taxation. You probably have heard that before. That's where the double taxation comes in. So now let's say the next year you want to take out $15,000, you have to pay the 7.5 whatever percent tax for FICA, and then the company has to pay that as well. So you're getting taxed on that again. So that's where the double taxation comes in. So all of the profit and losses of a C corporation must stay within the company. And then the S corporation, basically 99 out of 100 of my clients that are profitable are S corporation tax status with an LLC as the setup. And that's because they want to save that 15.3%. Now, if you have alimony, child support, if there's, unique circumstances, a C corporation may benefit you. Obviously we're not talking about real estate. There may be some benefits because it is its own separate entity. And if you're not taking money from it, like an S corporation, you have to take a salary, for example, Antonio. Now with the C corp, you don't necessarily have to take a salary, right? So when I bring up like alimony, child support, that's where that sometimes people will utilize that, because again, if their company's not paying you, and if you're going off of your income, then you're going off of the income. And that's why a lot of people won't do the C corp, is because all of that will stay within the company. And then when these students and when all of us want to pull money out of there, we're going to get that double taxation. And that's why that's the difference between the C corp and the S corp. Any other questions about that?
All right, one more question. If y'all got questions, ask your questions. I'm gonna ask my questions.
Yeah, please do.
When you are setting up your LLC, at least I know in Alabama, there's like a 2-month window where you can decide to be taxed as a corp or C corp. If you don't make a decision, then is it like, can you not retro taxation, or just kind of whatever you decide at that point is what you decide? Did that even make sense?
That is such a great question, because that may help people proactively put something in place if they need to, because you can make that designation whenever you want. Now you're obviously educated. It's not just Alabama, because the EIN and the taxation is a federal thing. So this is federal. So this is for us in all 50 states. But we have 75 days from when we form the company to elect to be taxed as an S corporation, a C corporation. Now, if we miss that window, the IRS has a form that allows you to apply for that taxation whenever you want. So what's really nice is we'll go up until the 12th hour, 11th hour, whatever you want to call it. We'll go up until the last second on December 31st. And if it makes sense for your LLC to be taxed as a C corp after a consultation, if it makes sense for it to be taxed as an S corp because the profit's going to be there, we can always make that change. And I can make that change all the way up until March 15th of next year, when the taxes would be due for any entity that was formed this year or any taxes that would be owed this year. So for those of you who do have entities already in place and you got crushed last year in taxes, you could go back and actually do for January 1st of this year, and actually make it an S corporation, even though it's already May 13th. So yeah, if you fall in that boat, or if you have questions, give Dirk a call or reach out, and we can help you with that. We don't nickel and dime people here. So if you just needed some guidance on that, we would, email you a form or just, tell you where to go. It's very simple to make those types of conversions. But no, that was a great question, Antonio, because they can make that decision anytime. So now they can have the entity, which, I mean, let me get to this real quick. Because I'm looking at the time, and I know we got so much I could talk to your group about.
I'm sorry. I threw you off. I'm sorry.
No, you're good. No, that was honestly a really good question, because sometimes people will wait, for the deal, or they'll wait for whatever reason to set up the LLC because some of those unknowns, right? Some of the questions that they have. But that's a great question. We want you to have the LLC because we want you to be in that position where you can be taxed whatever is going to benefit you the most. And I don't want you paying any extra money to the IRS than you have to. And I want to talk about that real quick. The way that you can utilize your LLC. For those of you that are making money, for those of you that are going to start making money, your LLC is going to give you so many different options. And those options are from branding to tax planning to the way that you can be taxed, like I just talked about. So I want to spend just a couple minutes on a couple tax planning strategies that people have heard of. If you qualify for it, please. And if your CPA hasn't brought it up to you, then I probably wouldn't call them, because that's a concern. But there's different ways that you can do and tax planning strategies throughout the year. And by having an LLC or having a company, you can pay your children. I have 3 children under 18. I'm taking advantage of that. So I've set up a family management LLC that I have money paid to every month. And so to reduce my salary, I pay them. This year, you can pay them up to $15,000 a year tax-free.
Per kid.
So, per kid. So that's 45 grand tax-free coming out of the bottom line of the business. Don't have to pay taxes on it. That money goes into my kid's account. My 17-year-old has bought him a Camaro SS, took $19,000 out of the account. I know my wife closed her eyes like that too, Ashley. She's like, what are we doing? I'm like, I don't know. But the good thing about it was, instead of dad only having 14 or 15 to spend after taxes, we had that full 19, because over the years we had been paying him. So by having an LLC, you're able to pay your children, that you can have them employed. I want
to touch on that before you go any further, Brent.
Yeah.
What are some ways that you can employ your kids? Because for some people, they're like, I can't see how my child fits in this, how I can even have them to help me. Like, what are some ways?
Yeah, we'll figure that out for you. Because I'll tell you, because I get it. Like if someone's a truck driver or something like that, but it could be anything from, modeling or on the website, or, just, and to be honest with you, and the IRS knows it, a lot of it is fluff. A lot of the kids aren't actually working, and showing up to the office and putting in the hours. I'd say 90% of the businesses out there are just taking advantage of paying their kids. As long as you have employment agreements and as long as you are doing it the correct way, then you can take advantage of that. And one supporting service that we offer is when we do clients' taxes, we communicate throughout the whole year. We're not one of those call us in February, we'll bang it out. We wouldn't be the right fit. We want people that want to do the planning, that are going to go to these events and, really grow their portfolio so we can implement some of these strategies, because paying the kids is one of them. And again, depending on your occupation, I haven't found one that we've not been able to implement if they qualify and if they have the profits, Ashley. Okay.
Mhm.
The other one is the Augusta rule. The Augusta rule, and this is something that business owners, we have hundreds of clients that do this yearly. You can pay yourself up to $28,000 a year through your company, and it's called the Augusta rule if you want to Google it. It started in Augusta, Georgia, at the actual Masters. So what happened was these real rich guys were going on vacation, spending $20,000 on a trip. They wanted to write it off. So they figured out a way to do it. The IRS said, okay, we're going to put a cap on that. So 14 times a year, you can have a meeting at your home. I've been doing this for 7 years, 200 something thousand, right? And I'm not afraid to tell people that. Like, I want people to do this. So 14 times over the course of the year, you can pay yourself the national average. So we have comps from like the Wynn, the Bellagio, Empire State Building, Holiday Inn. Like, we have comps, and the national average is $2,000. So you could pay yourself 14 times to have a meeting at your home and take the $28,000 that comes off the bottom line of your company, literally dollar for dollar, and you don't have to claim one penny of that on your taxes. And again, I tell it openly, online, recorded, and doing it 7 years. Yes, ma'am.
So let me ask this question. If you did a virtual training from your home, does that count as a meeting, or does it have to be people physically at your home?
No, my meetings are all just with me. Yeah, it doesn't have to. It does. It like I said, and if it's a single member LLC like I have for the Carlson Family Management Company, that's all you have to do. So you could count this if you wanted and record the minutes, but again, a lot of the times it's just with the husband and wife or just the sole owner of it. But these are just a couple.
Hold up.
Mhm.
I gotta say this, Brent. I gotta say this. So I got 5 kids.
Mhm,
So you just taught me how to save $100,000 in taxes by 2 strategies.
mhm, mhm.
I hear that.
$100,000 in taxes.
Yeah, the call I got yesterday, I had a client. They had 5 kids. Yeah, same thing, 5 kids. So that was 75,000 as far as the just paying of the kids. And of course, obviously, these are strategies and things that we're going to want to implement before we pay any money to the IRS. Obviously, if we don't have the capital or the cash flow, but if you do, and you're writing big checks and you're not implementing those strategies, I would call your guy and say, you're fired. Why haven't I been doing this? And find someone that actually understands it, because, some firms don't care enough to spend the time. They're just okay plugging in the numbers and spitting out the return. Not us. We actually, to talk about that for a second, the taxes, we haven't raised our tax price since I opened my doors 12 years ago. We charge one fee every year. And during that year, you literally can have face-to-face Zoom calls. You can call in monthly, weekly. We don't bill by the hour. We want to educate you so you don't have that shock look like, oh my gosh, I could save 105,000. We want to make sure that education, that tax election that you guys decide to do is done appropriately before the end of the year. And so it's a very personalized relationship. You guys would either work directly with like Dirk or myself. If you did have an accountant, we never have you switch each year. We want to provide that consistency, because again, a lot of this is new knowledge, and you guys are going to continue to have these education courses and continue to grow. And that's going to happen with us as well. So again, don't feel like you have to be an expert. If you think you need an LLC or corporation, have that consultation, see if it makes sense. And if not, you kind of know what the goals are as you guys follow the direction of these two wonderful people.
I
The
think
third,
you just said something key, Brent.
yes,
You don't have to be an expert, you guys. Like, you don't have to waste time spinning your wheels trying to Google, research everything. Like, find the who, not how can I do it? Who can do this to help me? Because you can get so much further along literally doing that versus you trying to figure it out. And come next year, May, you're still trying to figure it out. Like, do it, start it, get the LLC, call corporate capital, like, do it. Don't wait, because waiting will be here next year, same place, same time, and you're still playing double dutch trying to figure out how to get in.
well,
You're not the expert.
and I appreciate that, because I really don't want you guys to feel like you have to, study or become an expert. And sometimes I can give you analysis paralysis, and like you said, you'll be stuck. Which one of these topics I'll talk about, the living trust, here in a second, where same thing. I talk to clients yearly. Oh yeah, we're going to do it this year. It's been a goal. We're going to do it at the end of the year. And then I get a call from the spouse, and husband passed, and it's good to be proactive when it makes sense, and if it's something we need. The last thing I want to mention about your guys' LLC is, so we own our building that we work out of here in Vegas. My wife, so when we started our company, Corporate Capital, I was talking about that a little bit. We stayed with that brand because we actually built the credit on our company before we started. So I opened my company in October of 2013. By December 1st, I was able to get a $40,000 loan that we turned into 1.3. I love telling people that because it's just a good story, because sometimes people just need that starting point. Mm-hmm. So we were able to build the credit, get the loan, paid it off in just a couple months. Now our company had a brand. Now we had that separation, that brick wall. So that the Nolly right there is actually my wife's vehicle that she drives. It's probably not that clean anymore, but that is my wife's vehicle. And we lease that in the name of the business. And that payment, which I won't say, it's not cheap. That payment is all in the name of the company, and it is leased to the company. So if there were ever to be any type of litigate, or if you were to give it back or couldn't make the payment, they literally would not be able to come after us personally. Now, that was when we leased it. Since then, we've purchased it. Okay. But when we leased it, that payment was in the name of the business, and we were able to do it with no personal guarantee. So if my wife changed her mind, gave it back, yeah, they could have reported negative reports to the corporate capital, but they would have not been able to go after us personally, and they would not have been able to go after a personal home or any liens or anything like that, because the deal was this vehicle was leased in the name of the company. So now you have that separation, you have this tax advantage, you have a brand, and not to mention, you're just taken a little more seriously depending on what you guys are doing when you come to a deal, or when you come to something, when you're an LLC as opposed to an individual. And sometimes, again, that's just lack of education. Okay, real quick, because I know you guys usually only go about an hour. I'm happy to spend as much time as the group needs. But I want to make sure you guys understand. Yeah. Did you want to say something, Ashley?
No, you're good.
Oh. So I wanted to talk a little bit about, there's a couple different trusts that we focus on here. And regardless if you're a business owner or the LLC pertain to you or not, the revocable living trust pertains to all of us. So as a husband, a father of 4, 5 dogs, I own my building, my residence, my bank accounts, the things that we own as individuals. Maybe you have one home, maybe you don't own a home, maybe you just rent, but you have a bank account, you have, other assets. Well, obviously, we all know this. We've been taught this at a young age, that if we pass away and we don't have that revocable living trust, then everything that we have will go through probate. And when it comes to issuing the certificates of your business for your LLC, there's two. You can either issue them to a revocable living trust, or you can issue them to an asset protection trust. Today, I'll probably just focus mainly on the revocable living trust. I think for the audience today, Ashley, and then maybe another day we do the asset protection trust, or would you like me to do it all?
No, we can focus on one and then do another one another day. I'm good with that.
Yeah, I think that would be good because, and then we could talk about the financial privacy and the asset protection trust. But this one to me is the starting point. So in my opinion, this is where everyone should start, regardless of your portfolio. Because if you don't have a revocable living trust, then you're just putting your loved ones in a really, really bad position. Your living trust is going to have three major components. You're going to have your power of attorney. You're going to have your health care. And then you're going to have your last will and testament. I talked to someone earlier that just had a will, and the concern was there. They knew that a will go through probate. So for those of you who have actually taken the time, had a will drawn up, believe it or not, that will still go through probate. So in order for you to avoid probate, you must have a living trust. Now, the beautiful thing about the living trust is it has all of those components, including the will. So now everything from your bank accounts to your jewelry, your guns, your businesses, your vehicle, anything that you own that has title, if you were to pass away tomorrow without a living trust, you would be staring at probate. And I'm really big on giving examples. So my cousin last year, maybe a year and a half ago now, his parents both passed away in the same month. They didn't have a living trust. They didn't have a bank account. They didn't have a vehicle. They had nothing. He called 23 law firms. The cheapest retainer he could find was $10,000. They could have set up a trust. My parents did one in the 90s for hundreds of dollars. They could have set up a trust for less than a third of that. And instead, they put themselves in a position. They passed away. The bank foreclosed on the property. He lost $150,000 in equity, and he lost $7,500 of the $10,000 retainer. That is just devastating to me, especially someone who lives paycheck to paycheck. I was on the phone with someone earlier from this group that has seen it in their professional life and seen the devastation. So I tell people, I'm 44. I had mine before I even owned my home and my building, because number one, this is what I do for a living. Number two, I wanted to have that vehicle. So when I bought my home, I just recorded it in the name of my living trust instead of in my personal name, and then having to take this step later in life. Because again, we pass away with anything in our name, whether it's this business, whether it's this building, your home, it's going to go through probate. And I have two women right now, Glenda and Paulina, who are waiting on $98,000 and $440,000 from US Bank and Wells Fargo because their husbands passed away with only their names on the bank account, no TOD, which stands for transfer of death. The transfer of death should have been the living trust. Instead, they're waiting, and one is going on a year now, $440,000, and that's all the money they have. She even asked me to borrow money. I felt so bad. But you have to be proactive. You can't be reactive when it comes to the trust. Another example, because I think everyone has different scenarios. I'll talk about the kids next, but the healthcare. So I had a client, true story, beaten into a coma by her boyfriend. Her best friend, Vanessa, was her power of attorney, was her healthcare decision maker. So Vanessa was able to renew her entities with my company. She was able to file her taxes. She was able to do everything on behalf because she had this document. So again, you and your spouse would be each other's power of attorney, each other's healthcare decision maker. After that, maybe an oldest child, a parent, a sister. You would have your healthcare. Like in my living trust, I have chose not to be a vegetable. Like everyone has their own choices, but I have put that in my living trust that I don't want to be like that the rest of my life. So without that, the hospital or the judge or the courts could make the decision. The last example that I'll give you for the revocable living trust is the children. So I have 4 boys, 3 of them are under 18. So inside of my living trust, I have that my parents will be the legal guardian of my children in the event that something happened to Ashley and I. And then if my parents aren't capable, it's Anthony, which is Ashley's brother. So I have it listed out who is going to take over if something happens for me. Because people ask me all the time, well, don't I just need a living trust when I die? No, well, of course you do, but you need it for all these other reasons too. If you have a coma or a car accident, or if you have children who are under 18, so you get to put inside this document. And then the coolest thing about it is you can put stipulations in there. So if you guys are, really wealthy and doing well, maybe you don't want your kids to get $1 million or $2 million when they're 18. I saw some kid at BYU blow through it at 18 years old, 750,000. Became the coolest kid in school. All of a sudden, 20 people overnight, broke. So I have stipulations in mind where the kids will get so much: 18, 21, 25, 30. So you can lay that out where they're going to be comfortable, but you're just not going to give them the keys to the kingdom. And so again, all of you own bank accounts, all of you have vehicles, most of you probably own your home. Those of you who have LLCs, right now you're holding that membership interest. So that should either be in a holding company or that should be at a minimum in your revocable living trust for those reasons. And I'm very, very passionate about probate. And I know one of your students that I was talking to earlier, passionate about it too, because that was the person that mentioned to me that she's seen it. It's a very nasty, expensive game, and it can be avoided by having a trust. And the last thing I'm going to mention about it is trusts are just like anything else. Property that you guys are looking at 5 years ago to today, vehicles, the trust is not going to get any less expensive in 20 years. I mean, more than likely a trust will probably, in my opinion, be 10, 15 grand. My parents haven't had to update their trust in 30 years. As long as all kids and beneficiaries are listed, all you have to do is when you get that asset, like a bank account or a new LLC, all you have to do is put it into the trust. You don't have to update this thing every single year or every 10 years. So you're better off having it on the shelf for the current assets that you have, for those future things, that those occurrences that may take place with your personal health or for your children, and then obviously to avoid probate. And even if you just own a personal residence and nothing else, that's usually people's main asset. And so I usually will recommend the living trust for that. But it always comes up naturally because those law books that you're seeing there, we will have our clients issue their certificates to their trust instead of in their personal name, because there's 2 reasons. So now if they get sued personally, they can actually say that those certificates are not in their name. They're actually in the name of their living trust. All right. And then obviously if something were to happen to them, now that business, so the bank account with that business, everything would go into the trust. And what's really nice about a revocable living trust, kind of going back to the LLC, are we starting too early? Not at all, because you can always make changes to that trust as you go along. It's revocable. And one thing that my wife and I decided 12 years ago is we would never bill by the hour. We just have a flat fee for our service, and we will spend as much time as you need, whether it's taxes, whether it's the trust, whether it's an LLC, and that flat fee is one time. And then if you ever need to make changes to the trust, so if you're young and you have children, obviously we're going to want to add the children on as a beneficiary to the trust. So what's good is you're kind of getting everything organized, you're getting your structure in place, you're getting that locked in at a pretty decent rate, because I haven't raised that in 12 years. And now you have that peace of mind if you are married, if you have children, and if any of those things are concerned and you're not even doing anything in real estate. Like I said, the living trust applies to every single family, in my opinion. But if you do have an LLC, let's get those certificates out of your name. Let's get those assets out of your name. Let's get that personal home out of your name. If you buy rental properties, we don't want to look at putting those into probably their own separate LLCs. But instead of you owning those LLCs, we would have your trust own it. Or we could have the conversation about we could put the rentals directly in the trust as well, but now we're mixing eggs in a basket, right? So let's have that conversation. But what's nice is at least we have that final vehicle with all the arrows pointed to it of where my assets go and who they go to avoid probate. So if you have any questions about that, please let me know. I did mention earlier the Series LLC. I'm just going to spend a couple seconds on that and then answer any questions if we have some. So if you are in Alabama, they recognize what's called a Series LLC. There's about 16 states that recognize it. You can Google it. It'll pop right up. All the flags will come up. So what that means is if you are buying notes, syndications, if you're buying rental properties long-term, if you want to have them in their own separate vehicle, instead of setting up 15 different LLCs, we can set up a Nevada, Wyoming, or even an Alabama Series LLC and have it do business there. And now by having a Series LLC, just kind of picture, let me do a little drawing here. So basically, that's it there. So at the top would be the Series LLC, and then this would be property A, property B, property C. So now what's cool about that is I only have one renewal fee with the state of Alabama every year. I only have one tax return to file. But the most I have personally is 102. So I have a client with 102 properties underneath their Series LLC in Tennessee. So now legally, if something happens on property 89, they can't go after 1 through 87 and 90 through whatever, 102. They can only go after that one property because it's in its own separate LLC. But it's not. It's kind of like a prison. If you envision a prison, it's a one building and there's 100 inmates. They all have their own cells, so they're all protected at night, right? Mm-hmm. That's the same thing with the Series LLC. So if you have multiple rental properties that are in your name, call Dirk, talk about the Series LLC, and keep the cost down, but get those things out of your name and get them, first off, legally separated from one another, first off, and now have that separation from you as a business owner.
Absolutely. Absolutely. Okay. I have a question. Someone said the S Corp, what is the taxes on an S Corp?
So you just pay your personal income tax. So for example, if I was at 30%, you just pay the federal income tax. You don't pay the self-employment tax. So it just depends on the tax bracket, but you'll save you won't pay the 15.3% into Social Security, Medicare, Medicaid. Now, I'm 44. I don't think Social Security will be there. So I try to keep my salary as low as possible. I'm not as worried about Social Security, right? So I'd rather have more come to me in a form of a distribution and save the 15.3% than to increase my W-2 and to pay into that, if that makes sense.
That makes sense.
Sorry, I was looking at you instead of the camera. Sorry about that.
Oh, no,
You're good.
You are great, man. You definitely dropped some gems on us today. I personally got to do some LLC adjusting.
Some restructuring.
If you in the chat and you got to either get an LLC or adjust your LLC, drop LLC in the chat so I know I ain't the only one.
Hey,
I know I ain't the only one after hearing this.
Hey, and one thing and I mean this, and obviously your group knows you guys well. I assume you guys are all pretty close friends. And you guys will see when you call Dirk, we are very laid back. We are not chasers. We'll explain once kind of the service. Obviously, we're not going to dog you, but, me personally, I usually will do a consultation, send the proposal, and that's it. Now, in my position, I usually get those back, obviously, but I won't call you next week or the week after that. And the consultation, one thing that we talked to Ashley and Tony about was, just providing that to the group. We don't charge for the consultation. So even if you were to spend 30 minutes, an hour on the phone, asking these questions, maybe you were afraid to ask them and maybe something pertains to you specifically, there's no strings attached, and I mean that. And there's no pressure. We're not used car salesmen. It either makes sense or it doesn't make sense, and we'll send you the proposal of what that package or what an LLC would look like. And we obviously would love to work with you. You guys are great people. I've enjoyed the people we've met thus far, and I look forward to being part of your group. I wanted to offer that as you guys have these events, if my schedule allows me, if you ever need a speaker, let me know. I'd be more than happy to kind of help this group. Because the reason I bring that up is I've worked with I went to an event in Dallas this weekend that had 170 people. 30 people there were my tax clients. I never met them before, ever. So it was awesome just being able to go. So like many of you that may reach out, maybe a client before the next event. So yeah, just keep me in the loop, Ashley. Antonio, let me know if you guys need anything on that.
Sounds good. Look, we got people that need to get their LLCs adjusted. We got Miles, Nikhil, Parker, Coleman, Lewis, Woods. Yeah, okay.
Hey, and then also,
what's the best way to get in touch with you?
Yeah, I was gonna say. So let me just do this, because then this will go to me and to Dirk, and then I have 2 personal assistants here. So between Dirk and I, we actually have that email set up just specifically for this reason. So if you were to email that, we would know. And then if there's a section there, I think, that says notes, just put DP Homebuyer if you want. So we know where you came from, or you could just let us know when you call. But that email address goes to our founder, who's the head of credit flow. It goes to Dirk, and it goes to myself, and then my other business partner, Jamie, she doesn't work over the summer. She just works during tax season. So yeah, Dirk and I will handle anyone that reaches out. And like I said, it's a very easy conversation. We'll give you up to an hour, and if you need it. So yeah, thank you.
Man,
and then Ashley, in the future, Antonio, one thing I can do in the future, depending on how your guys' group grows, and I've done this for about 4 or 5 groups now, is we could set up a dedicated phone number in the future too. So when that phone number rings, it would just ring to Dirk and I. And I think I have an extra 855 number, so I'll start working on that for you.
Sounds good to me.
That's why I fell in love with you guys when I met you. I love your energy. I know you guys are successful, and you're going to be even more successful. So I want to be a part of that, and I'm more than happy to create that line. So when you have your students or friends or whatever you guys call each other, you could just provide them that email or that phone number, and then they would know that they would get just Dirk or I. Okay.
All right, that sounds good. That
sounds
good.
Great.
I dropped it in the chat. I also told them to say the Denmarks. That way you guys know that it was Antonio and myself. Because most of them call us the Denmarks. That's what they
Yeah, I saw that. I liked your logo. I never told you guys. I liked the signature. I like the branding. You guys have done a nice job. So
Thank you.
I'm so excited.
I'm excited too. You got my wheels turning now.
Tanya,
yeah. Thank you for allowing me to be a part of it. I know it's a lot of information, and it's a lot to digest, and for the most part, I think people have a pretty good idea, if they need one or not. And if those questions need to be answered before making that decision, I think you guys will see Dirk is a great guy. I saw he had to get off at 12. He's a prompt guy too. So he got off at 11:59. We had to call at 12. I would have called you at 12:07, but he called his guy right at 12. So, but no, did you guys have any other specific questions or anything at this time?
I have a lot of people say that they're taking it in, that they were taking it in. It was like, but I think if you guys learned something, put me in the chat. If you learned something new today, put me in the chat.
Can I put me?
Oh, you probably have me 100 times.
Yes.
I know I definitely learned something new. Antonio has been talking about series LLCs for quite some time. And I can say that he's kind of planted the seed.
But I couldn't explain it how you explained it.
But you definitely watered it, okay?
And Ashley, what we can do maybe in a couple of weeks, if you want, whenever, I can do a presentation and just focus on a couple slides with just the series LLC and then the asset protection trust, and maybe try to give a couple examples as well.
Okay.
And if you'd like, because I think a series LLC is something that people really should consider and have. And there's a lot more I can talk about, with that. But I've just seen some really unique situations. They work. And there's a lot of states that don't allow them because they're greedy, like California. They just want their $800 a year franchise tax for every LLC that you set up. That's why they won't allow them. So there's ways actually around that, believe it or not, in California with different land trusts or limited partnerships. So again, is most of your group in Alabama, or are you guys all over the place?
Most of them are
Foundation in
Alabama.
Alabama.
Some are in Georgia. Some are in Tennessee and Texas. So more of that southeastern area.
Yeah, I got a lot of clients in Texas, and we work with clients in all 50 states. I mean, for those of you who aren't even business owners, we even do personal, tax returns. So one thing that my wife and I talked about when we set up in 2013 was being a one-stop shop. So for people that did have questions or it was new, that they had one phone call, whether it was talking to a CPA or an attorney or, their consultant. So yeah. And then again, for those of you that do have an entity, I just want to say this, that if you aren't doing your annual meeting minutes, if you're a corporation, take a look at that. If you're an LLC, you're not really required to do them. You can waive them. And inside our record books, there's a document to waive your annual meeting. So I usually recommend for people to at least waive the annual meeting of their LLC, which you can find on Google, or we can email you a template, for something that simple. But again, just always want to encourage people to be in compliance if you are incorporated, because it's not worth anything if you're not. They're still going to just set it aside and sue you personally. We want to make sure that brick wall that I had on most slides stays there, because that's super important. And that's really what it does by having that LLC at the end of your name.
Absolutely.
Sounds good.
Thank you, Brent.
Thank you, guys. I really appreciate the opportunity very, very much. And I look forward to hearing from all you guys.
Absolutely.
Yes, sir.
All right, you guys. I know you learned a lot. I need you to drop in the chat. Tell me one thing today that you learned. Something that you're going to take massive imperfect action on. It's not going to be perfect, but it's going to be great. All right, because you're doing it. That's what makes it great. All right, drop it in the chat. I want to hear about it. Antonio wants to hear about it. And then from there, we can see what do we bring Brent back on to talk about that you need more help with. All right.
Yeah.
Love you guys.
I love you guys too.
All right, Brent.
All right, see you.